Are you ready to learn the current patterns that are unfolding on the Mag 7 stocks that are going to either take the market much higher or could start the next downtrend? Stay tuned because we're going to cover everything. Welcome back, Cool Cats. Let's kick things off by looking at the chart of SPY on the daily time frame. We can see that it's formed a bit of a hidden bullish divergence here where we have a slightly lower low here on the RSI and a slightly higher low on the actual chart. And a lot of times what happens with that is you have a push higher followed by a further move down. Now we can see some evidence that we're having bullish price action by this green hammer candle right now. So let's zoom into the 2-hour time frame and see what price action has been doing. This was this previous support line of the big old rising wedge pattern that we've been covering. And you can see that every single time that price touched this, it sold off pretty sharply. This was the support line that previously was the resistance line after a big sell-off on August 8th. We can see it was respecting that for a while. Every time we came down and we touched it, we bounced off of it. We finally got below and we rejected off of it. Now we're still underneath it and underneath that previous support line, which is very important. And we are dangerously close to previous all-time high here, right around 565.39. I'm very interested in seeing what price does. Is it going to gap over that, or is it going to find major resistance here? Because there is a confluence of major resistance here. Alternatively, if you look at the RSI, it's a bit ugly, but you can see a bit of an inverted head and shoulders pattern that's forming here. If that plays out, we could actually see the market break back above this previous support line, which is currently acting as resistance. And just for reference on SPX, that would be hitting somewhere around 5,700, give or take, if we're actually going to break back above that. But keep in mind, this pattern, this rising wedge pattern, absolutely could still be in play, and we could come up here and meet major resistance and then begin the big sell-off that if this actually starts to sell off around in this area, we're looking for a sell-off target of around 50-50, give or take. We're going to take a quick look at the VIX and the Dixie, and then we're going to get into those Mag 7 stocks that I mentioned earlier. When I first got started trading, I traded a lot of penny stocks, a lot of things that were heavily shorted. And one thing that I noticed, and I've been using the Ichimoku Cloud for a while, is whenever you see a lot of resistance like this, and price is trading up into that resistance, the things that I saw in those penny stocks is that's usually what led to a squeeze. So I find it very interesting that the VIX seems to be kind of basing in this area. If this leads to a squeeze, then obviously the markets are definitely going to sell off. We've got some interesting things that are going on with the Dixie. This is looking at the 4-hour time frame. We can see that it's been in this descending channel now for multiple weeks, and we're very close to this upper resistance line. So it's very curious to see whether or not we reject off of that. Obviously, if we reject and start coming back down, a weaker dollar will probably mean a stronger market, but it's yet to be seen. If we look real closely at where it's consolidating and then zoom out, we can see that where it's stalling out is actually just underneath this previous big long-term resistance line of what looks like a falling wedge pattern. If it gets back above that, it's very curious to see how far it will break out. And we can also see that this symmetrical triangle pattern, this has not met its full pattern target. So if this is going to get fulfilled, we're still looking for the dollar to eventually come down to around 98.99, in which case this descending channel will continue to be valid. But if the alternative occurs and we end up breaking back out instead, the dollar could go much higher. Of course, it'll have to get above this key level of around 103, 103.50. But if it could do that, then the market will probably sell off. So I was playing around on Moomoo the other day with some nice clean charts, and it helped me to visualize some patterns that I hadn't seen previously. One of which is this pattern on Meta. See this upper resistance line and this lower support line in orange. This appears to be forming a bit of a rising wedge pattern. One could argue that it may be an ascending triangle. Either one of those can potentially break out in either direction. Obviously, a rising wedge pattern is more likely to break to the downside, whereas an ascending triangle pattern can kind of break either way depending on momentum. Depending on whether or not we can break this key resistance level here, this pattern would be targeting around 672 per share to the upside, but to the downside, it could be targeting around 344 or 333. And remember before how I said that there can often be nested patterns. There's patterns within patterns. Right now on the 2-hour time frame, we can see that Meta has formed a symmetrical triangle. That thing is targeting somewhere around 535 to the upside, which would break above this key resistance, or around 503 to the downside. It really looks like this is set to break out tomorrow. When we take a look at the chart of Microsoft on the 4-hour time frame, we can see for a while it was in this descending channel. We broke down below, got back above. Of course, you know what happened with earnings. We just gapped way down, then gapped back up. And right now we can see on the RSI, there's a bit of a basing pattern here that's forming. And if we zoom in, lo and behold, we have another symmetrical triangle pattern. Right now, it appears to have broken out. If this is a legitimate breakout, it doesn't look like it really had a retest, but if it is a legitimate breakout, that thing is going to be targeting around 431, 430 to the upside. But if it actually turns out that this is a false breakout and this curves back down, this would be targeting around 403 per share. One of the things that I was able to tease out while looking at Moomoo on those clean charts is that there is a resistance line here that goes all the way back starting in March of 2000 and goes all the way up until now. You can see every single time that it touched that line, it had a pretty sharp sell-off. Right now, if Apple were to make it all the way back up to that line, it could get all the way up to about 428, 420 per share. And when we look at the RSI on the monthly time frame, we can see, again, we had a hidden bullish divergence, which a lot of times those things will play out very bullishly at first, and then they turn over and they crash. Zooming into the 4-hour time frame for Apple, we can see we had this daily gap that had formed before. We have now filled that gap. And looking even a little closer on the 2-hour time frame, we can see another symmetrical triangle. This thing, if it breaks out, is going to be targeting around 236 per share to the upside and around 222, 221 to the downside. Switching over to Tesla, same thing. When I was looking at that nice clean chart on Moomoo and charting it for the first time, I realized I had to update my lines. Before, I actually had this charted as a symmetrical triangle, kind of something like that. But I've taken that line out because I can see that was an error, that was wrong. And so now what we've got is a even bigger symmetrical triangle pattern. This is playing out over the course of, this thing started in 2021. The pattern targets for this baby are somewhere around 470 to the upside, but it could also be targeting around 78 to 80 to the downside. Very interestingly, when you zoom into the daily, we have this nested pattern. We have a symmetrical triangle within the symmetrical triangle. This thing, if this ends up being just a false breakdown and this is going to continue to the upside, from this pattern target, we would be targeting around 264 per share or down to somewhere around 158 per share. But wait, there's more. When we zoom all the way into the 2-hour time frame, we have another symmetrical triangle pattern. Remember that symmetrical triangle patterns show indecision in the market. If this is a legitimate breakout, and so far this appears to be, this is now going to be targeting around 222 per share, which would actually take us back above the previous resistance line of that bigger symmetrical triangle pattern. But if for some weird reason this ended up being a false breakout, then this would actually be targeting back down somewhere around 203 per share. Looking at Amazon on the 4-hour time frame, we have a pattern, symmetrical triangle pattern, that has been playing out now for multiple weeks. We had something similar to Microsoft play out where we had this descending channel. We broke up, we broke down, we came back. Now you can see the much bigger pattern that has actually formed is a symmetrical triangle pattern. Looks like we're just teasing getting above resistance right now. I would not treat this as confirmation. But if we zoom out just a little, you can see that where this is targeting, if this breaks out to the upside, is targeting around 218 per share. If this were to actually turn back around and break down, we would be targeting around like 139 per share. But you have to keep in mind what's in the way of different patterns. And so let's switch to the daily. this main support line would really get in the way of this trying to break down here. If we did actually break this main support line and held below it, we potentially could see this go even lower than that. And keep in mind, with this rising wedge pattern we've covered in previous videos, that pattern target here was already met. And wouldn't you know it, we've got the same kind of funny business going on with Google on the 4-hour time frame. It's inside of a symmetrical triangle pattern for multiple weeks, market really trying to figure out which direction it wants to take. That pattern, depending on which way it breaks, we're going to be targeting anywhere from around 185 to the upside. Of course, it would have to get above this main resistance line, or around 145 to the downside. Of course, it would have to get below this main support line. And it kind of feels like the market is undecided about being undecided, because the same thing with some of these other charts. We have a nested symmetrical triangle pattern within the symmetrical triangle pattern. It looks like we're teasing a breakout here. We'll have to wait for confirmation to see if it actually is going to be breaking out to the upside. If it does so, and it can break above this previous resistance, we're looking for an upside target of around 170. If we go to the downside, we're looking at a target of around 158, 159, which actually would have confluence with this main support line down here. And something to always keep in mind is how long you expect these pattern targets to take to be reached. So something that's taking, multiple weeks to break out, it might take a week to actually reach that target. So let's say we broke to the upside on Google here. Once it finally broke out, you might get that initial breakout, very impulsive. Maybe you'll even make it halfway through the pattern target, and then you could get a pullback. Sometimes that pullback could be anywhere from 50 to 61.8 on the fib retracement, and then it's going to break out to the upside even further. But you always have to keep the time scale in mind. And last but absolutely not least, we have NVIDIA. We're looking at the 4-hour time frame. We can see that we had a lot of ugly price action that was going on, a lot of consolidation in this area, and for now we broke to the downside. We have another symmetrical triangle pattern right now. And as you may know, a lot of the times symmetrical triangle patterns, they can be continuation patterns. So if we're already going down, this would indicate that this is going to continue further down. If that happens, we're targeting around 110 per share. If it goes to the upside, we're targeting around 127, 128. But symmetrical triangle patterns actually can be reversal patterns as well. So it's yet to be seen. We do have a support level here. So if that holds, we could actually see this break down, hit support, and then rocket right back to the upside. But the fact that the market consolidated for this many days and then came down kind of leads me to believe that this may actually be a continuation to the downside. If you're loving this content, please make sure to like, share, and subscribe. As we covered before, I pointed out this pattern back on like the 27th. I knew that the market was going to have a sell-off event, and between the 28th and up until early morning on the 29th, we had that corresponding sell-off on SPY, which you can see what occurred right here. Basically, we had a rejection off of this previous support line, turned resistance, and we had a big sell-off, but then the chart met demand. Interestingly enough, as you can see right here, we have another symmetrical triangle pattern forming on the overall market. My big question is, which way is this going to break out? I honestly hate symmetrical triangle patterns because you often have a false breakout followed by the real move. As we saw here, this looked kind of like a symmetrical triangle pattern. We had a false breakout to the downside, and then the market kept moving up. So is that going to be the same thing that happens now? Or is it more likely, since we're already kind of in an overbought condition across the market, are we going to head to the downside? Or are we going to see a short squeeze unlike anything we've seen in months? And what good would a weekly analysis video be without taking a look at the economic catalysts that are coming out? As you can probably see here, almost everything that's coming out this week that's going to be market moving is jobs related. Of course, today was Labor Day, so we've got nothing going on there. But tomorrow, we're looking at the S&P Global Manufacturing PMI, more manufacturing PMI and prices coming out. Then we're looking at Wednesday. We're going to be seeing the JOLTS job opening. I think that's going to be a big market mover for sure. On Thursday, we're looking at the ADP non-farm employment change and initial jobless claims, another PMI stat, all of this coming out. And then Friday, I think will also be pretty market moving. We've got non-farm payrolls coming out as well as the unemployment rate. Those are going to very much be market moving. And then hopping over to Moomoo's earnings calendar, there's really not much in the way of earnings tomorrow. But when we look at Wednesday, we've got Dollar Tree's earnings, so we're going to kind of get an idea of what's going on with retail. On Thursday, we've got Broadcom, so we're going to be getting a look into the semiconductors. And then on Friday, we've got Big Lots. Again, it's going to show the strength of retail. I really love Moomoo's earnings calendar. I love the accuracy of their charts. And so if you would be interested in supporting my channel, I'm actually going to put my referral link in the description below. And if you don't already have a Moomoo account, if you sign up using my referral link and deposit at least $100, you get 5 free stocks. So we both win as long as that's done before the end of September. And I'm not directly affiliated with or endorsed by Moomoo, but I do like their app. And as always, nothing that I've said in this video should be considered as financial advice, nor should you make any financial decisions based on what I've said in this video. I want to continue bringing value to the table and sharing with you everything that I see, whether it's an upside target or a downside target. Without further ado, let's get into today's trading rule to live by.